Welcome, ladies and gentlemen, PDAC 2025, and it's the first day here, and we are now at our second interview with IsoEnergy, and Phil Williams, the CEO, is here with us. Good morning. Good to see you.
Good morning, Jochen. Good to see you. Welcome to cold Toronto.
Oh, yeah, Jesus.
As always.
It was about like minus 16 this morning when I was walking over. Freezing my ass off. Jesus. But okay, it is what it is. We got to do something here. IsoEnergy, I'm a shareholder of your lovely company for sure. And I think things are going extremely well, except the market is not loving us. It looks to me like a little bit we are in capitulation mode, but we will talk about that later. First of all, you closed $26 million flow-through financing. Congratulations on that.
Thank you. Yeah, we closed that on Friday. It was $20 million in flow-through, but then there was another $6.25 million of hard dollars that came beside that. That was NextGen Energy maintaining their pro rata interest. So NextGen owns 32% of our company, and they'll still own 32% after the financing closed.
Super, fantastic. So you are set up for this year, I would say.
Yeah, so between that money and the money we have in the bank today, we have over $50 million. We also have $40 million of equities in other uranium companies. And so we're ready for a big year. And we're already underway in our winter drill program at Laroque. Yeah. Love to talk to you about that.
Yeah, exactly. That would be my next question, because what you got to do with the money.
Yeah, no, exactly. And as you know, flow-through funds have to be spent on Canadian exploration. Yes. The bulk of those funds will be earmarked towards exploration at the Laroque East project, both this winter, this summer, and possibly into next year. Mm-hmm. And as I said, we're drilling there right now. So we have 2 rigs on site. Mm-hmm. The first part of the drill program is going to be focused on trying to find extensions to the existing resources. Mm-hmm. So as you know, we have the highest grade indicated resource in the world at 48.6 million pounds at 34.5%. Mm-hmm. It's an area that's obviously extremely prospective for additional uranium. So we're drilling extensions to some of the known mineralization there right now. Mm-hmm. And then we're going to move the rigs at the second half of the winter program out to the far eastern side of the property, about 9 kilometers away, where last summer we did some work and identified some very prospective areas where we could find completely new pods or lenses of mineralization.
Okay, super. So, how much more you want to do until we see, let's say, steps towards production? I wouldn't say decision, but more in the direction of production, because the world needs your uranium.
No, for sure. And look, this project we believe will be a mine in the future. One of the big questions around it is what's going to happen with our neighbors. Mm-hmm. So you know this, but the deposit carries across the property border to a project called Dawn Lake that's owned by Cameco and Orano. Cameco and Orano are drilling very aggressively on their side of the border. Mm-hmm. We don't know all the details about the results from their programs, but we know they must be good, and they're getting what we have on the other side because they're accelerating their plans. We can see it across the border, more drilling, more people, larger camp, more things underway. So really the question about production for this asset is really, how do the 2 sides of the deposit come together, and what's the plan for developing them together versus individually?
Absolutely. So there could be something really big.
It definitely is something really big. How it's all going to play out is to be determined. But I think that given your point about the world needs more uranium, and the eastern side of the Athabasca, the deposits that are being mined today will deplete over time. Mm-hmm. So we will need additional mines on the eastern side of the Athabasca. Hurricane has to be one of the main resources that will be considered in that development. So we're looking at something that needs to come into production in that early to mid 2030s. And so if that's the plan, which we believe it is, we really have to start getting going on the permitting, on drilling the deposit, even on a higher spacing or a tighter spacing, putting together a feasibility study, those kinds of things.
Okay, super, perfect. Production is still a keyword for me, because you have in the US also, mines you are setting up, making them ready for production. Will we see 2025 first production there?
Yeah, look, we could be in production. So the great thing about our projects in the United States, and again, you know all of this, we've been talking to you since the very beginning, we have conventional uranium mines that were in production in 2007, 2008, 2009. All the infrastructure is there. A significant amount of CapEx has been already put into them. They were put on care and maintenance, and all of the permits were kept in good standing. So they can move ahead very, very quickly. The real trick to the timing decision is really the price. So we need, we've seen prices come back from over $100 to $65 today. This is not a good price in our opinion. We don't want to turn these mines on and sell at this price. So we need to see some price action. But what we're doing in the background is we're getting ready to have these mines come on. We're going to update the economic study on particularly our Tony M mine. We're doing a number of other studies there around ore sorting and mining methods. And so we can be in a position to know exactly what we're going to get from that mine. And that's going to take about 6 months. And then hopefully that dovetails with the resurgence in the price. And we can push the button and start production by the end of the year.
Yeah, I mean, resurgence in the price for uranium spot market. I mean, the contract market, we are at $82, which is not too bad, but we both know and think it should be much, much higher. And it will go much, much higher because we are still in a huge deficit in the uranium market, and this will not diminish for sure. So you have been at BMO conference in Florida last week. So what was your observation there? What is your thinking on the market? To me, it looks like capitulation, to be honest. Yeah, I'm buying, definitely, because I think it makes no sense what is going on there, because a market with like a deficit of around 25% now annually, this is not sustainable for low price. The price has to rise.
Yeah, 100%. And look, it really is a tale of two sort of stories. One is the long-term or even short-term, mid-term, long-term fundamentals of the space are still intact and very strong. And every investor that I met with at the conference, and we met with a lot of people, uranium is still on people's radars. They're very excited to hear about it. They all believe in that story. But the challenge is the way the price action has moved over the last few months. It's really gotten people confused as to what is really happening. I think generally speaking, in this space, uncertainty breeds illiquidity. And when there's illiquidity in the spot market because of uncertainty around geopolitical events, tariffs, wars, etc., then price just drifts. And that's where we are in today. And this capitulation, I think you're right. And it's become even more than that. It's not just people selling their equities in the uranium space, they're going short. And we can see that some of the largest shorted stocks in Canada right now are uranium names. So that tells you that there's not just selling pressure, but there's people that are looking at this trade and seeing that it's got a, there's some more downside to it. I don't know if that's the case. And what we know, and we've seen this in many other sectors, when the shorts have to start covering, that's when things can get very exciting. And we could see a very small move in the uranium price scare those shorts out of those positions and get things going again. And again, it's very hard to say when that can happen, but I think it can happen very, very quickly.
Yeah, same. This is what I think also. This is why I'm on the buy side, definitely. And my feeling is by summer, I think that horrible journey is over.
Yeah, you're right. I think so. And honestly, Jochen, what we don't know is what's going to be the catalyst that will get things going again. And we see every week there's some positive news, whether it's about power demand and data centers or, and not that this is positive, but a mine flooding in Russia. And sometimes these news events, which you think should be the catalyst, nothing happens. And then a catalyst will come along that you weren't expecting, and it doesn't even seem that significant, but that can be the catalyst. So I think people should be watching this space very closely, putting their scorecard together of the names that they like the best and getting ready to go back in when things move, because as we said, they can move very dramatically.
Absolutely. Okay, coming back shortly to your company, because you said you have 50 million in the bank now, you get additional money in the bank. So the one thing is that you are drilling heavily on Larocque. What else do you want to do to bring the company really forward?
Yeah, look, I think the other thing that we're doing that investors and shareholders should be aware of is we have a number of other projects in our portfolio that on their own would be company making assets, but because we have Larocque and we have near-term production, that's what people tend to focus on, and that's what we focus on. But I think this is the year you're going to see us do some more work and talk more upfront about some of our other projects, and particularly projects like Coles Hill in Virginia. With everything that's happening in the U.S. and under the new administration, I think there's a significant chance for us to move that project ahead. And remember, we have the largest uranium resource in the United States in Virginia and at Coles Hill, and that project could be a company maker on its own. So we're going to put a lot more effort into that. Similarly, in Canada, in Quebec, we have the Matouche project, very high grade resource, lots of exploration potential. A challenge that historically the previous owner wasn't able to get social acceptance for the project. We're working on the ground there to see if we can get support for that. And then the third part of that would be Australia. Australia is a tremendous jurisdiction for uranium. It's a great mining jurisdiction. And there are changes. There've been changes on the local political level and potentially on the federal level that will put Australia more into focus. Again, we have an asset base there that will be a standalone company on its own that I don't think investors are paying attention to. So we're gonna bring them forward, talk about them more, get investors to pay attention to them.
Fantastic. Phil, thank you very much. We wish you all the best for that. And of course, it's also my intention because I have your stock. I'm owning that.
We appreciate it.
And I think, bring the attention on the one hand. On the other hand, really, let's move the needle here with the market, with the prices. And you guys are delivering fantastic results. You have a perfect setup. So I think that should work.
Yeah, we do as well.
Super.
Thanks again.
Thank you
Jochen.
very much. Yeah, ladies and gentlemen, that was Phil Williams, the CEO of IsoEnergy. And you heard it. Perfect ingredients, perfect setup. They have the money. They are, of course, spending the money in the right projects. They have standalone projects, which really can do one company. They have like 5, 7 of them. They are also in the short-term production mode, so they can react on rising uranium prices very fast, which is great. A lot of optionality, a lot of flexibility, and they are in Canada, the US, and Australia. What else do you want more? Really make sure you consider IsoEnergy. It's a fantastic company. I'm in. Thanks for watching us, and bye-bye from Toronto, PDAC 2025.